Good morning, South Florida. Hello, world. This is Robert Henderson Jr., certified financial planner, certified tax coach, live in the beautiful studios of WZAB 880 The Biz. We have a fantastic show lined up for you today. Those of you all who just tuning in to me for the first time, I am Robert Henderson Jr., a certified financial planner, certified tax coach, and I'm the president of the Henderson Financial Group. Our main office here is located in Miami Lakes, Florida. We have another office in Fort Lauderdale, Florida, and we also have another office in Buckhead, Atlanta. I've been doing this for over 30 years now. We're a full-service financial planning firm, investment advisory firm. We specialize in total financial planning. We work with clients with fee, or we work with clients commission, and sometimes we do both. Yeah, it just depends on what the client's preference is. We really take on our clients almost like a family member. So when we take on a client, we don't just do wham, bam, thank you, ma'am. We actually delve in and get to know the client. They don't become just a number to us. We really engulf ourselves and put ourselves into their situation, help them with their goals and objectives, and we love what we do. And we've been doing it for a while, and we love it. Sounds like we got my sister-in-law, who's the vice president, Linda V. Harris. She's tuning in also. She's on a satellite. Linda, are you there?
I am here, Robert. Thank you for including the V, Linda V. Harris. Good morning to everybody.
Yes.
I'm here. Life is good. And I'm glad to be with you. Sorry I can't be in front of you, but you get to have your chair this time.
Oh, that's so gracious of you. Women rule the world. That is so nice.
The future is female. You're right.
Yeah, so I guess all us guys now will get our dresses and our purses ready, right?
No, I wouldn't go that far. Why don't you just embrace this? You know what? We're not going to start off this conversation.
Listen,
this is a great day.
Yeah, I just, you really want me to tell you why I embrace it. I mean, I was raised without a father. I was raised with my mother and her sisters and my sisters and all females. But you know why, Linda? Every time you say females rule the world, it somehow I feel shut out. And I'm a team player.
Oh.
I'm a team player, and I want to be included because I think I'm pretty balanced. But when you just grandiosely just women is women this and women. I mean, that's like somebody saying black, or somebody saying white, supremacy, or Jews or Spanish. Why can't we just get along and be people and just say, hey, why don't we help each other? Because we need each other. We really do. And when you say women and money, there's no dollar bill to just have woman on it. It's green. And that's why I feel like that. Not to take nothing away from the triumphs and all of the, past and the goals. And I know that it's discrimination, it's inequality, but it's inequality and discrimination for almost everyone. It's not just women. But the Mexicans are being discriminated, the blacks are being discriminated. I mean, the Spanish, the Jews. I mean, everybody is being discriminated because people hurt people. Hurt people. So when you just say women, I love women. I mean, my mother's a woman, and I just want to be included. I don't want to be shut out. I don't like boundaries. I don't like where I can't go. I want to be free. Psychologically, that's what it does to me. So now I've said it. Now you understand.
Well, I don't, but I accept what you're saying and your version of it. Yeah. And that's all that matters is how you feel.
All right, so don't try to shut my mouth when I say it inside. Now, all right, we got a caller early on this morning here. Someone's calling in. Let's see who this is. Caller.
Hi, how are you today?
Good, and yourself?
Hi, fine. This is Mike. I want to tell you how much I enjoy, number one, the music on the weekends. Thank you very much for the music.
Thank you. Good. So nice of you. Good music, right?
Right. Okay. I was listening to your show the first hour from 7 to 8. I agree with most of the stuff. In fact,
Well, hold on a second. Let me correct you.
Yeah.
The 7 to 8 show is my good friend Keone McGee and his wife Stacy.
Right.
So that's not Robert Henderson or Linda B. Harris. That's
Okay.
Yeah, that's now my daughter just started from 6 a.m. to 7. The day was her first debut. She comes on Friday nights for the last 3 weeks, Hyacinth, from 9 p.m. to 10 p.m. And this morning she debuted, and the show repeated itself from 6 a.m. to 7 p.m. And then Keone McGee,
Right.
he's from 7 to 8.
Right. Okay, but what I wanted to say is, okay, I had a unique experience this week. I went to a college. I was considering maybe going back and getting my broadcasting degree, and they were trying to say, well, it's a good thing, but you should get into something else because of the fact as a blind person, they teach a lot of TV work, and it would be too difficult for you, and you can't really manage. And, you talk about goals and what's happening with the country today. It's kind of sad that people don't really want to relate to other people.
I agree wholeheartedly. I just was saying to my sister-in-law, Linda.
Right. In fact, I went to Lighthouse for the Blind Tuesday, and they told me to, they don't have any right to tell you to get into another industry because of the fact that you can still do it. I mean, it's going to be difficult. I know I've been in radio before, and it's an interesting field.
What is your name again?
This is Mike Lance.
Okay, so Mike, listen.
Yeah.
Don't just, this guy who told you that, he didn't speak for everyone.
Right.
That's his own personal experience, his own personal view. So I don't want you to take that to heart. If that's your goal, that's your dream, that's what you want to do, you go for it. Okay.
Right.
He's just a little stumbling block, but don't take it to heart. You go after your goals and you do it. All right. The next person that you talk to won't tell you that because there are a lot of blind people, disabled people that are doing wonderful things. All right. We got to go.
Yeah.
Thanks for calling in.
Okay. Thanks for listening.
Okay. Bye bye.
Okay.
Yes. I don't know how he thought that our show was Keone's show, but I guess, it's the same motivation and just all come. But I'm glad he called. But
Yes.
Just because someone tells you no, you can't let that change your mind, especially if you really have a goal and a dream and desire, because you're going to get no's all the time. How many times you've gotten no, Linda?
Oh, too many times. I take no as not right now. No means come back later, right?
Right. So Mike, don't let that scare you away or deter you. You keep on. I mean, because all the stuff that's really good for you, I found out of doing, my 60 years. Everything that's good always appeared to be hard in the beginning, but if you keep doing, you keep going at it, it becomes easier and easier and easier. We got a great show lined up for you today. Today, I really want to talk about investing money and giving you a good perception on the different type of investment classes that are out there, because the media does a really good job in making people think that the stock market is just where it is. If you're not in the stock market, buying in stock market or mutual funds, then you're not investing. But that's not true. So I want to talk about the different classes, whether putting money in banks or putting money in the stock market, the mutual funds or real estate or even cash value life insurance. So Linda, I'm going to ask you a question.
Mm-hmm.
And if you had a goal, and if your goal was to invest your money where you have liquidity, where you have control, and where you have protection. I'm going to say it again. If your goal, you came to me as a client, and you says, Robert, I have this money, I have $100,000. And what's important to me is to have liquidity. And I also want to have control. And you also want to have protection. And I put out and explain to you the different classes, the asset classes. 1, being a bank. 2, be in the markets. Markets mean stocks, bonds, mutual funds, ETFs, just volatile market. 3, real estate. And 4, cash value life insurance. So if the goal was for you to have liquidity, control, and protection, what's your favorite? What would you ideally want me to help you invest in, Linda?
Well, it's almost unfair because I, as a financial advisor, I would definitely say some form of cash value life insurance. But very often I get people who answer that question with, I'm going to put it in a CD. They think it's, they checked off the boxes, liquidity. Okay, I can go get it and break the CD. Control, I can drive up to the bank. And protection, it's in a bank. Of course, it doesn't keep up with inflation, but to answer your question, Robert, it would be some type of cash value, and there are various kinds, depends on the person, of life insurance.
Well, when you put money inside of a CD, we don't consider that investing.
Right.
Yeah, we really don't.
Right.
We don't consider that investing. We because you're actually lending. You're lending your money to the bank, and you're helping the bank do business with oftentimes rich people that have money to lend. Mm-hmm. So basically, most of us think that, we're saving our money when we put it in the bank. And in a sense, you are, but we've been Jedi mind. You're actually lending your money to the bank so the bank can do its business. Because banks, what they do is transact business, and they create arbitrage. So when you put your money in a CD, in a sense, you're lending your money to the bank. The bank is telling you, listen, we're going to protect your money for you. It's going to be here, and you're going to lock it up for 6 months CD or a year CD or 3 years or 5 years. And then they tell you what kind of interest they're going to pay you just for the pleasure of borrowing your money. And oftentimes, especially in today's climate, interest rate climate, and the Fed's just reduced interest rates 1/4 point again. So, you'll be lucky to get 1% on a CD. So if you have $100,000 and you lend that $100,000 to a bank, you make a deposit and you put it in a CD, you're probably going to get $1,000 for the whole year. So it's like $83 a month in interest. And then you have to file those $83 a month. You have to claim that on your income taxes. So in a sense, net, what do you actually have? You have less than $1,000. You have less than 1%. So if you put $100,000 in a CD, they say they're going to give you $1,000 for the year. They say you in the 20% bracket. 20% of $1,000 is $200. You got to pay to IRS. So you walk away with $800 on $100,000. Now some people say, if they had $100,000, they could surely make more than $800 over a 12-month period. They can earn more off of it. So that's why we don't consider putting money in banks, putting money in CDs as lending. As investing. It's calling lending. You really are the bank, and you're lending money to the bank, because the bank will turn around with your $100,000 and debit out in smaller portions, sometimes one lump sum, but more oftentimes they'll debit out to Ms. Rudolph, give her a credit card and charge her 28%, but it's your money. Call Mr. Gomez, they'll charge him, 15% for a loan or credit card, and they'll make, for Mr. Charlie, Mr. Goldstein, he wants to buy a boat, and they'll also take your $100,000, a piece of it, and $50,000, and lend him and charge him 12% interest. So that's how banks make money. So $100,000, when you look at it, because there's a lot of people that have a lot of money in banks. They have a lot of money in banks, and they feel because they want to have control and they want to have liquidity, and they say they want to have protection. But that's a holding tank, and I just don't think that that is the best use of your money. And some people wonder why are some people always getting ahead and they're not. And I say it's your perception, what you've been
Right.
told, right? Now, we got to take a station break. Mike has started that music. When we come back, we're going to continue this. I want to give out the word of the day, and then I want to further this because I want to educate you. I want to get into talking about insurance, okay? And investments. Keep it locked. You're listening to Robert Henderson Jr. We'll be right back after the station break. We're back live. Robert Henderson Jr., certified financial planner, certified tax coach, in the beautiful studios, live in the beautiful studios of WZAB 880 The Biz. And we're streaming live, those of you all. We're on www.880thebiz.com. You can also go to our website at www.thehendersonfinancialgroup.com. www.thehendersonfinancialgroup.com. And you can pick up a lot of our past radio shows there. You also can go to YouTube because this show is going to be uploaded on YouTube, and you can look at some of our past shows, listen to some of our past shows also, and it'll be on YouTube, Robert Henderson Understanding Money. Let's talk about the word of the day. Every Saturday I give out a word of the day because I want to improve your vocabulary, my vocabulary, and it's all about learning. I really love to learn. As a matter of fact, there's nothing in this world that can slake my thirst for learning, for knowledge. I want to say it again. There's nothing in this world that can slake my thirst for knowledge. So the word today is slake, S-L-A-K-E, slake. And slake is, and the way I just use it is to lesser, to reduce my desire. The word slake. There's nothing that can play down or stop or reduce my thirst for more information, for more knowledge, for more growth. I am a man that I have dedicated my life to learning. School, education, it wasn't just from the first grade to the 12th grade to 4 years of college, another 2 years of college. Education for me, and it should be for all of us, is a lifelong thing. You should be living and learning and growing every day. There is no end to it. When you're dead, that's when you stop learning. But as long as you're alive, I don't care if you're 60, 70, 80, 90 years old, there's growth and development all around you. There's newness all around you. And that leads me into the perception. The perception of, and I'm thinking about this because a good friend of ours, Linda, yours and mine, that we've been knowing over 20 years, he died. And this guy died, and when he died, the funeral was not going to be held for a whole month. Anytime someone dies, and the funeral is not 2 days from now, or 3 days, or a week, 2 weeks, or 3 weeks, and the funeral is a whole month, then that sends up a signal. The signal is, if someone died today, why would you keep their body out for a whole month? And oftentimes, it has to do with economics, money. And sure enough, our good friend, who Linda and I knew for over 20 years, he sold life insurance. Yes, he did. And when he died, he didn't have any life insurance. And we thought that was, to say the least, it was tragic. We got a phone call from his wife that we needed to all of his friends needed to chip in. And a lot of you all listening to me right now, when I'm saying this about our good friend, I want you to look in the mirror. I want you to think about yourself. If you are the breadwinner, if you have loved ones, if you have small children, or even if you are alone, but you have no money saved, there's no one that's going to get off this planet alive. We all going to make our transition. And when you make your transition, you're either going to be cremated or buried. And so many people that says they don't want to be cremated, they want the cheapest forms of of disposing of your remains. Most of them who don't have any money, they want to make sure they're not cremated. They want to have a burial. Now, I don't know. Some of y'all haven't looked or noticed the cost of a funeral. The cost of a funeral costs more people more money than they usually have doing while they're alive. I mean, a funeral can cost you $10,000, $15,000, $16,000. And especially by the time a funeral director pulls your heartstrings and tell you, take mama home a great way. Take her out and take mama or take papa, take them out in style. Don't just have a plain box. They play on your emotions, which often means an economic windfall for them. I think it's a sad time to be playing on your emotions and trying to scrap up money or taking your last dime or spending $20,000. Some people spend $30,000 on a funeral, with a horse and carriage and motorcycles and choir, and everybody's got to be paid. It's big business. But this guy didn't have any, and he sold final insurance, final expense insurance. Now, those of y'all listening to me, I'm telling you this story because I want to hit home with you. Do you have coverage? If you have children, like I say, if you have a wife, or that if something happens to you, they're going to put you away. You probably say, man, I don't care what they do with me. But the people who love you care. They do. And oftentimes they got to raise $10,000, $12,000, $15,000. All you have to do is get you a life insurance policy. That's all you have to do. And life insurance policy, let's talk about the first, the cheapest. The cheapest policy that you can get is term life. They sell them. I mean, I get flyers at my office that people trying to solicit me at my home. You're 50 years old. You pay $50 a month, which is $600 a year. For a $100,000 policy. Now, that's term insurance. Let me tell you what term insurance is. You would think that a whole lot of people know, but they don't, because most people are too busy and they don't want to talk about death and dying or final expenses. They rather talk about the basketball game or the football team or Netflix or a whole lot of things that's not going to, that doesn't really benefit them. It's an emotional candy for them. But you should look at your health, death, dying, because like I said, all of us have to go that way. So you should at least look at it. That, whether you should have a will or trust, you want to have your whole financial situation where you can be taken care of, where you can take care of yourself, where you can don't spend all your money, where you can save some money. These are important things that as you become 21 years old and you're older, you should really pay attention to. Charles and Tavares was in my office earlier this week, and I said that, it's amazing how when you're an adult, you have options and you have an opinion. But if it was me, if I was God, I would have made it where you recognize an adult, or you recognize an adult that has knowledge and has some sense by their height. Yes, and we laughed about that. So in other words, just because you became 21, just because you grow and time goes by and now you 30 and now you 40 and you say you grown and you got some sense. No, because there's a lot of silly 60-year-olds. There's a lot of silly 70-year-olds. There's a lot of 50-year-olds who act like 16-year-olds. And you can't really tell because they dress up, look good, and comb their hair. And they fool you. But they don't have a bit of sense. What if, I'm digressing, but what if you knew how smart someone was by their height? So everybody dumb would be 2 feet tall. And every time you start learning something, you grow. Wouldn't that be wonderful? So the taller you are, that means you got a lot of sense. You couldn't fool nobody because you're 2 feet tall. Wouldn't that be a great world?
Wow.
Wouldn't that be a great world? So no one would fool no one just because, Linda, you're female, you look pretty and fine and talk good, but you're 2 feet tall. So you couldn't fool nobody. Only time you grow is when you get some knowledge and you get some sense. Wouldn't that be a wonderful world? I hope our next world that we're born into is something like that, because there's a lot of facade out here. There's a lot of fakers out here, you know? I guess Donald Trump would look like he's 2 feet tall. Never could be president. Okay, I'm digressing. Let's get back to term. What is term life? Okay, so term, I want you to think of this. I want you to understand this. And I'm going to give you a picture. I say term is the cheapest form of protection. It is. Because you can, like I say, you can pay $50 a month for a $100,000 policy, meaning that if you die, they give your loved ones $100,000 tax free. So so that's good. What's bad about it? It's a term, meaning that if you pay $50 a month and you're 50 years old for a $100,000 policy, yes, that looks like that's cheap. If you die, your loved one's going to get $100,000. But the problem is there's a term limit on it. You have to die within 10 years. So if you're paying $50 a month times 12 months, that's $600. So the first year you don't die. Matter of fact, you going to the gym, you're doing push-ups, you're trying to eat right, you became vegan, you going to the doctor, your checkups, and you paying $50 a month, $600 a year. The first year you didn't die, that $600, you might as well throw it in the canal because you didn't die. So now, and that bet is good, that term is only for 10 years. When 10 years come, your insurance coverage evaporate. You have nothing. You got to start over. Now, instead of being 50 and you didn't die and you paid $600 a month, $600 a month for 10 years, you've paid $10,000. Now, the term is over. You don't have any more coverage. And hopefully, in them last 10 years that you just went by, your health remained strong. If it didn't, now you're 60 years old and now you want to re-up and get some more insurance, they're going to charge you a whole lot of money. That's what term is. So term really is like scratch off to me. It's like the lotto. It's like scratch off, hit and miss. You're paying the insurance companies $600 a year just in case you die. And the insurance company's betting that you're not going to die. And if you don't die in 10 years, they keep all your money. That's what term is. I tell you, term doesn't, all your money is gone. And some of y'all have 20-year terms, and you have a nerve to live past 20 years. So if you live past 20 years, that means that you're going to throw your money away. If you're going to get a term, seem like you're getting ready to die, okay? But if you're trying to live, what you got a term for? And some of y'all got 30-year terms. I've been doing this business since I was, about 21 years old. Next month, I'll be 61. That's 40 years. Y'all want to know how many people have term life that they've died and I've told them, hey, here's the policy, you won? One. Out of the 40 years that I've been in the insurance business, one. When I got my license and I was 21 years old, my life insurance license, and I was 21 years old, 6 months after I got the license, I sold a policy to a childhood friend of mine. And he had he got in a car accident and he died. He had $100,000 term insurance, double indemnity, meaning that it was an accident, so therefore he got $200,000. He didn't get it, but his loved ones got $200,000. And he had a small kid, and that's why I talked him into getting life insurance. That's the only one. Can you believe that? That is the only term life insurance out of 40 years that I've sold that somebody collected. Term life is the most profitable insurance product for insurance companies. That's why they solicit you. And you says it's cheap, so you're going to get it. At least it's some coverage. But I want to tell you, if you're going to buy term, let it be temporarily. Don't ride out with term. That's like having some candy and sugar. You don't want to eat sugar and candy for breakfast and sugar and candy sweets for lunch and sugar and candy and sweets for dinner. Pretty soon you're going to have diabetes. Pretty soon all your teeth going to rot. You can eat a little bit of cake at the, for a birthday or a little dessert, but you can't just ride off with it for 10 years and 20 years and 30 years. It's going to bite you. It's going to be the worst investment not even investment, the worst way to spend your money. That's what term insurance is. Y'all got that? Linda, you still there?
I got you. Good explanation. I actually have never had anyone collect on term that I sold it to. At least you had one.
Yeah, because the insurance companies know that their payout out of $2 trillion a year what they collect selling people term insurance, the payout is less than 1%. Meaning that they collect all that money and they only have to pay out less than 1% because people have died and collect. Most of the time, people let them lapse. They turn out.
Right.
They stop paying for it, basically. That's a good product, right? If your cost is only 1%. But it's cheap. But cheap is not always good, is it?
Not at all.
So what type
Not
of
at all.
So what type of life insurance do we like, Linda? Cash value, right?
We like cash value, absolutely.
Now, why do you tell the people why do we like cash value? Now, we ain't always been like this. The first 20 years of my career, that's all I bought was term and invest the rest. They fooled me. They say buy term and invest the rest. Well, first of all, I was cheap. I would say, I've learned, don't say cheap, say frugal. That's a more fancy word. I was frugal. I didn't want to pay a lot of money for death insurance. But that's all I always thought was insurance was for death. I didn't know that there's other loopholes and strategies for insurances. No one told me until I started continually to take classes, advanced classes. I always wondered, why would they sell something that costs more than term death insurance? That didn't make sense to me, Linda. If you can buy $50, you can pay $50 a month for $100,000 life insurance if you die. Why would you pay $5,000 a year for the same $100,000 insurance coverage if you die? Everybody got to die. I said I'd rather pay $600 a year for $100,000 life insurance. Why would I pay $5,000 a year for $100,000 coverage? It didn't make a lot of sense to me, Linda. But no one was able to explain it to me. And the reason why they didn't explain it, because I was asking a lot of the insurance companies, and the insurance companies want agents to sell term because they make more money off term insurance. But they don't, executives, CEO, they don't buy that term. They buy cash value life insurance. And I'm going to tell you why. You know the most, who buys cash value life insurance the most? It's called BOLI, B-O-L-I, bank-owned life insurance. Yes, yes, yes. Banks buy more cash value life insurance than anybody on the planet. And second to banks is corporations, business owners, businesses, big McDonald's, Walmart, corporations, Apple. They got a lot of money. They invest in cash value life insurance. And then CEO and all the people in Congress. And when I found out about this, I said, oh man, they own something. If you don't believe me, just Google what is Section 7702. That says that if you put money in a cash value, not a term, because I told y'all what term is what you call pure death insurance. But a cash value life insurance, it's something, we call it a super Roth. Because you overfund and you put more money into the life insurance plan over and above the insurance costs. So let's just say that you want $100,000 life insurance. And let's say just the cost for the death insurance is, you're 50 years old, let's say it's $2,000 a year. Well, there's a strategy that after you pay for the pure death insurance, the $100,000 death insurance, that costs you $2,000. After you pay for that, you could put 10, 20, 30, 40,000 on top of it. Yes. So when you put it on top of that, do you have access to that money? Yes. Why would you do that? Because minimum, when you put money on top of that, overfunded the cost of insurance, that extra money is getting minimum 4.5% interest. Do you pay taxes on it? No. There's a way you don't pay any tax ever. So in other words, it's like a Roth. Do you have access to it? Yes. Is it creditor proof? Yes. Is it lawsuit protection? Yes. So now that it doesn't really look just like a death insurance anymore, do it? It looks like something that's not only liquid, not only you have control, but you also have protection. Because if you put in $1,000, if you did die, you're getting $100,000 tax-free for your loved ones. But we ain't talking about dying, because you're gonna put in $1,000 just to get in the door to have the policy. But after you get the policy, then you're gonna stash money on top of it. That's the strategy that they don't tell you about. That's the strategy they don't have on CNBC. That's the strategy that you don't hear them talking about. That's the strategy that you're not going to hear Wall Street talking about. You're not going to hear that. No. You're going to hear about the Dow Jones Industrial Average up, Dow Jones Industrial Average down. All of that's maybe stuff. That's maybe. Maybe. We hope. We think what the market's going to do. No. When you put your money in cash value life insurance, there's no hope. There's no maybe. It's not what we think. It is. We call it self-completion. You know, if you want to leave a legacy, if you have retired and you say, listen, I have some children, I want to leave my grandkids some money, you can spend your money. Just go out and get you a cash value life insurance policy. $500,000, $1 million, $2 million, whatever, name it. And that's the legacy. You ain't got to save that kind of money. All you got to do is pay on it.
You mean they don't have to scrap and deny themselves and not go on vacation and not go out to dinner and just say they don't have to, like you said, you don't have to save it. You know, so many people live frugally, as you like to say, and thinking that's the way to leave a legacy behind. But you don't have to do that.
No.
You don't.
No. So let's just say you have $100,000, $200,000 in a mutual fund, and it's not a retirement, but most people have their money, from retirement, and they have that money, and they say that they feel good about having that money. But if you have your $200,000 in a mutual fund, let's think about the benefits. First of all, is it liquid? Yeah, no, not really, because it depends on what the market did that day or that week or that month. So whatever you see is not what you're gonna get. Oftentimes, you have to look at the end of the day. But you have the money because you feel like it's invested in a mutual fund. But let's just say all of a sudden you give up the ghost and you go to heaven. Whatever is in that mutual fund, that's what your loved one's gonna get. So if you got $200,000 in a mutual fund or an investment, that's all they're gonna get. But if you got $200,000 in a cash value life insurance policy, if you got $200,000 in there, man, $200,000 in there, man, if something happened to you, they gonna get $1 million tax free. That's a good exchange, isn't it?
I can't think of one better.
Linda, let me tell you something. I've been doing this over 30 years. Mm-hmm. I'm a stockbroker, real estate broker, insurance broker, certified financial planner. That's all I do is read. I read 4 books a month. I'm constantly reading, studying, webinar. I don't look from left to right, high to low. My whole life is on the hunt, trying to find more, better, and better, and better. I ain't seen nothing better. I'm telling you, when I look at it, I say, oh my goodness, the benefits is amazing, and it's tax-free. Mm-hmm. I haven't seen anything better, Linda. It's tax-free. Tax-free. Let me tell y'all something. When you hear a broker on investment or Dave Ramsey or Susie Orman, all of them telling you to buy term and invest the rest, let me tell you something. To look back and say, man, you've been a fool is an awful thing. To look back to say, man, I've been tricked, I've been a fool. Now, a lot of y'all who's listening to my voice, and you at least half past a century, We all can look back and say we've been a fool and wish we would have known something, right?
Right. Right.
How would you like to get 60 and 70 years old, 80 years old, and look back and say, God, and you can't go back. You wish, you would have known better.
Uh-huh.
If you don't have cash value, liquid life insurance, that's what you're going to say. I promise you. I promise you're going to say that. Think about it. Think about it. I promise you're going to say that because I've done it. Let me tell you something, man. I wish I would have learned about this when I was 21 years old, 25 years old. But then I have to look at it and say everything is in divine order. It's coming to me.
Right.
So you can't miss the blessing. I figure like the creator, the God who I serve, give it to you when you're ready for it, right?
Absolutely.
So when I learn about something, I tell y'all. And when I don't tell you just for you, just for me, I share it. I'm a team player. And that's why I say every time you keep talking about us women. I feel like I'm locked out. Like I'm coming home and everybody in the house and you locked me out. That's the feeling. I don't like that. I don't like that no more than the blacks against the whites, the Christian against the Jews. Oh, that's foolishness. We all human. I don't like that. I don't think we ought to compartmentalize everything. We ought to separate everything. We all want the same thing. Money is money. Being taken care of yourself and taking care of your family, we all want that. They just got us all messing with each other and picking on each other and got us distracted. But we're becoming more a class society. More and more. Either you're going to be rich or you're going to be poor. That's where we headed.
Yes, we are. We're not fooling with each other, the rich and the poor. We are separated.
We got to take this station break. When we come back, we're going to finish. We'll give out this telephone number to the studio. 305-541-2350. Let me give it out again. 305-541-2350. Call us here. Let us know. What do you think? Did you learn anything today? You know what term is. You know what cash value, whole life. You know IUL. We'll talk more about that when we come back. We're back live. Robert Henderson Jr., certified financial planner, certified tax coach. Linda V. Harris, Vice President of Henderson Financial Group. Let me tell you why I changed my whole views the first 20 years by term. Let me tell you why I changed my whole views on this whole cash value life insurance. At one time, and I'm gonna paint a picture so you can understand what I'm talking about, so you can see what I see. At one time, a cell phone was just a cell phone. We used cell phones just to talk. They weren't smartphones. They was just an instrument where you call someone to communicate. Well, when Apple came out, Steve Jobs came out with this smartphone, it changed the whole game. That reminds me of death insurance, life insurance. I've always looked at life insurance as just protection against premature death. That's it. And it still is. But not only that, the life insurance products out there now have become smart life insurance. Instead of smartphones, they become smart life insurance plans. Now you have a life insurance plan that's not just like a phone, not just for talking. Life insurance not just for dying. Now you have, just like the smartphone, you can text, you can watch a movie, you can type, you can get emails, a whole lot of things you can do now on a smartphone. Take pictures, beautiful pictures, on a cell phone, smartphone. The same thing has happened in the life insurance industry. They've really kept up, and they've really improved. So if you have a policy that you've had for 10 years or more, it's like you have a regular cell phone. All you can do is talk on it and answer. Call out and receive a call. You got a flip phone. If you got a flip phone right now, you are antiquated. You're not keeping up. Nobody can't text you. You can't take pictures on it. You can't listen to YouTube or music. You can't do FaceTime on it. You definitely can't do Zoom. You can't answer your email on that flip phone. And you're walking around with that. Some of y'all is good. You don't need a smartphone. But a lot of us, this smartphone has really helped our lives and made it much more productive. And we get a whole lot of things done. Well, that's what's happening also in the life insurance world. If you're still on term insurance, it's like you have a flip phone, okay? At least you have something, though. It's better than not being able to communicate. At least you have something in case you die. But to graduate, to get a smartphone, it's like having an IUL. Even the whole life insurance that I always detest. I never liked whole life. But now they got the new and improved whole life. They got a whole life where you can put in $1,000 today and in 10 days borrow out $900. And your $1,000 is still in the policy. Can you believe that? Years before, you couldn't. You had to buy a whole life and you didn't get any cash value in it until 3 years later. So if you put in $10,000 this year, the first year you have no money in there. The $10,000 is gone for mentality costs and commission and fees. But now that's different. They got the smartphone whole life. They got the smartphone IUL, Index Universal Life, where you put money and overfund that. The minimum you can get just having money into the policy is 4.5%. There are some companies that give you just in the money market into a life insurance plan, they give you 4.8%. You ain't got to worry about nothing. Where can you get 4.8% tax free? You can't get it in a bank. You can't get it in a CD. I like real estate, but real estate comes with trade-offs. You can have real estate. I do like it for taxation, but you got to deal with them tenants. You got to deal with the roof. You got to deal with the insurance. It's a lot that goes along with it. It's good. That's why it's not easy, but there's some drawbacks. But I haven't came across anything that was better and simpler than cash value life insurance, because you can have the more money you can put in there, the more you can take out. You can use it to buy a car. You could use cash value life insurance like Walt Disney did to start, or like McDonald's. That's what they use. You put a lot of money in that plan. Then if you want to use the money, you take it out. All of it's tax free. There's no limits in terms of like a Roth IRA. You can only put in $6,000 or $6,500 into a Roth. Roth meaning that you put money in there after taxes and all the interest and growth. When you take the money out, you never pay taxes. That's good. But it's still in the stock market. When the market crashes, your money still crash. What I like about the cash value life insurance, when you put money in overfund it never can crash. You never lose a penny. So it's liquid because you can get money in 3 days. I like that. I need you all to learn more about that. I need you all to call my office so I can examine your existing life insurance plan. It won't cost you a dime. Call the office on Monday, 305-825-1444. I'm going to give out the number again. You got to do something. You can't just sit there. You know you need to do something. 305-825-1444. Let me give out this phone line here, because we only got another minute before we have to go. See if anybody learn anything. Matter of fact, I was going to say, are we on the air? But I guess Mike did call 305-541-2350. Only Mike, I guess Mike radio was the only show radio that was on. Anybody else radio on? 305-541-2350. I think Mike is the only one listening out there, Linda.
I think you gave some good information today, and they were just really, really listening. The next step, I would think, is for them to call the office to get that checkup. You know what I mean? And again, if you have something you like, that's fine. Doesn't cost you a dime. But I'm telling you, there is a reason why some people seem to always get ahead and be a step ahead and, living just a little bit better. And it's just because they act on the information. You hear it all the time, but you need to act on it. And I think a lot of people don't do that. They just hear it.
Well, I hope you learned something today. And now, if I offended you, then shame on you. That means you ain't get it. You ain't hear it right. So if you ain't hear it right, I want you to go on YouTube and listen to this again. Or go on to our website, www.the Financial Group, and listen to it. Sometimes you got to listen to things over and over. Sometimes, when you hear something, you just don't take it in. You took it in wrong. Oftentimes that happens. So go and listen to this show again, all right? Stay tuned. Same channel, same time, same station. We'll be right back here Saturday. Peace. Have a great weekend.